Hey traders, Raghee here, and in this recap video, I want to point out a losing trade today. And I think there's a lot of lessons to be learned in this one, and why I still say, and I'm going to show you two trades, but the emphasis is going to be on the loser. And that's the Dow from this morning. There was a clearing range set up. I sent this one out and the S&P. And this morning, we had a pretty, the open was pretty vigorous. You could see how much bullishness there was on the open. It did not exceed the price movement range of 170 points, which was fine. And then once 10 o'clock rolled around, we were waiting for a breakout of that high, which we subsequently got with the 10:05 candle. Okay, great. So that is then, now we're off to the races. So immediately, I'm calculating based upon whatever low I have on hand for 10 o'clock, which happened to have been 24,790. I'm calculating what the upside target could be for the next hour. So with that upside target, I knew that the market could move the low, average, and high. And I'm thinking to myself, well, the way we moved earlier in the day, let's maybe keep in mind trying to go for the upper end, the high, for the range, average to high. And then it became pretty clear when we couldn't even move about 50 points from that breakout that this market might be stuck. And this is not a subjective assessment. Take a look. I couldn't even plot 50 during this hour right here. And that's pretty telling, because here's my range for the hour, and way down here is 50. It's literally not on the bar. So immediately I'm thinking, whoa, we can't even plot, 75 or 80 points, as follow through after what should be a pretty decisive break of the clearing range high. Nope, couldn't do it. So he said, all right, let's just go with the lower end. We're not going to guess. We know what the market does with a 68% probability. We're going to go for the lower end. And even that eluded us. So here's a great example of the criteria for the setup was met, and it triggered. The follow-through looked promising, if not, kind of choppy. So we reeled in our expectations by going to the lower end of the price movement range. And even then, no joy. We had one more shot at a buy on a swing. And then as soon as that swing failed, the whole kit and caboodle was over. Now, this is not a small amount of loss or risk. Unfortunately, it was about $275 per contract. Now, that might seem like nothing for some of you, especially after yesterday's rip. I mean, gosh, this is, it's Friday as well. I don't want to blame everything on Friday, but that right there was where everything ended. Now, let me also mention how important it is to have done that kind of adjustment to the lower end of the price movement range, because that made all the difference in the S&P. So we went 1 for 2 on the clearing range this morning. Yesterday, we went for 2 for 2 for like a Super Bowl kind of day, but today's a whole new day. So we took the trade, it triggered, and this one took a little while longer to trigger. It triggered by about quarter after 10. And we take the 10 o'clock low once again. We calculate the high based upon the price movement. And, I have my low calculation for 10 to 11, which is about 7.5, 7.75 points. I have my average. I have my high. Well, knowing that we're having a really difficult time after the clearing, kind of getting going, I can see that for nearly 15, 20, 30 minutes, after. Luckily, we went up and hit that 32.5, and initially we were hitting areas around 30, 28. So the cool thing is, at least we went up enough from the range extreme low, and this would have actually been happening during 10 to 11, not this level. That was actually 11 o'clock. But between 10 and 11, that high right there, and then as we went up and tested this area around 31, from this low, that satisfied the low end of the hourly price movement range. So in this case, unlike the Dow, we were able to take a little something off the table. And then same thing happened here. Took the swing right there. Took the loss right there. One was a break even, and then one was a swing. So by then, everything is done. done. Stick a fork in it. We are done. So, we've been talking about some nice follow through. I don't want anybody thinking that, hey, I'm just showcasing great trades. No, I want to show that we practice the same thing again and again, project the price movement range, put our profit target out there, follow the market trend. And I want to give everyone one really important tip, and that is at 10:30 Eastern, 9:30 Central, wherever you are in the world, at 10:30. And so this would be 30 minutes after our 10 o'clock clearing range trade goes valid. 30 minutes later, remember, you're switching from clearing range, all this psychology here. It's a brand new day. I'm no longer worried about the clearing range. It's a brand new day. And at 10:30, I start to assess, well, what color grab candles do I have? Is this an uptrend? Do I have dots? And I then go back to good old-fashioned market trend analysis, because that clearing range is a price and time trade. What the high and low during a certain time. After that, I go right to market trends. Everyone have a great weekend. I'll see you in the next update.